What are prediction markets and why do they matter? My guest today is Stephen Grugett, the founder of Manifold Markets, which is a prediction market website where users can bet on any kind of event. Political races, the war in Ukraine, COVID outcomes, etc. We discuss why so many people are excited about the potential of prediction markets and how they might be useful, whether or not they're accurate, what the ideal future state of a prediction market might look like, whether or not they have the potential for harm or abuse, and so much more. As always, if you enjoy the podcast, we appreciate if you share, like, review, subscribe, all of those good things. If you want to support the podcast, you can go to patreon.com/Neoliberal Podcast. You can become a member of the Center for New Liberalism at cnliberalism.org. Thank you for being a listener, and I hope you enjoy the show. Welcome, everyone, to another episode of the Neoliberal Podcast, part of the Center for New Liberalism. I'm your host, Jeremiah Johnson, and my guest today is Stephen Grugett. Stephen, welcome to the show.
Hey, thanks, Jeremiah, for having me on.
All right, so most people, listening to this may be somewhat familiar with prediction markets, but they probably don't use one yet. They probably, are not intimately familiar with them. So for those who are not super familiar with them yet, can you just cover what is the basic case for prediction markets? Like, what are prediction markets? Why do we think they're useful?
Sure. So a prediction market is a place you can go where you can bet on the outcome of a future event. Usually prediction markets are construed as a place where you're buying shares that pay out $1 if the event occurs and $0 if the event doesn't occur. So a more concrete example would be a market on the question of whether Biden will win the 2024 presidential election. People can bid on shares which pay out $1 if he does become president and pay out nothing if he doesn't. So the cool thing about this setup is that once you have people buying and selling these shares, then the price that they're willing to pay for these shares basically corresponds to the probability of that event happening. So if I'm paying 50 cents a share, then that means that I think that the odds, the true odds of Biden becoming president are 50% or greater. And when you have enough people bidding on all of these different sorts of things, then the market will, reach a consensus about what the fair price for that action is. And from that, you can extract a probability, which is the market's view on that event occurring.
So that's the basic case. The idea that we can get information about some event or about some particular phenomenon or whatever the case may be based on betting on it, based on people's, inclination to make money and the market mechanism. Do we think this actually works? Because we see this can work for obviously like stock prices and things of that nature, like actual economic markets. But why would we think that this works for other types of things that are not economics?
Yeah, so there's a very basic efficiency argument you can give for why prediction markets work in the general case for basically any type of question. And it goes a little bit like this. Like, suppose you're a market skeptic, you think markets deal with money and capitalists, and they're not very good at predicting what the future is going to be. And that instead you have a favorite pundit or thinker, and you believe that he's really good at what he does, and that you trust his opinions over the market. So let's suppose for the sake of argument that that's true, that this pundit really is that good. And basically what that would mean is that if you do have a prediction market out there and it truly is not as good as this pundit, then you have a trading strategy that basically will give you infinite money. Because now what you can do is when you see that the predictions that the market is estimating and the predictions that your pundit is estimating are different, then you can buy or sell shares on the market up to what your pundit says. And if your pundit really is better, then you're going to make a huge amount of money over time. So this basic efficiency argument is that as long as there are like valuable sources of information out there and people who are interested and earning money, then we can expect the market to be pretty efficient because there's always this obvious strategy of copying what the more efficient source of information would say if the market currently isn't the most efficient thing.
This is, if you're so smart, why aren't you a millionaire in the stock market, as an argument? But in a serious sense, that is, to some extent, that is a legitimate argument that if the markets are wrong, why haven't you corrected them, I guess.
That's right, yeah. And of course, in practice, there are all sorts of other factors which will like attenuate or, worsen the degree to which prediction markets can elicit true information. And of course, the most obvious one is like liquidity or the amount of money in the market. If there's only $1 that you could possibly win from trading in a marketplace, then, there's not that much reason to believe that the world's experts are going to like be actively thinking about the question and speculating, et cetera, because there's so little for them to win. So the incentive actually has to be there for this type of efficiency argument to work.
Yep, I definitely want to get into that. We're going to dive into kind of the particulars here of exactly what the restrictions on these markets are and how much they matter. But before we do that, let's stick in the theoretical for, just one more second. When people get excited about this, because they do, there are a lot of people who are very excited about prediction markets and think that they have a lot of promise and think that they could potentially be really cool and really useful in the future. When they're thinking about this, what are they thinking about? What applications are they thinking about that are unusual beyond the typical market sense of just, well, we use a market to determine interest rates or we use a market to determine stock price? How else are people envisioning that we could use these markets?
Right. Really, the potential domain which prediction markets can influence or be helpful in is extremely vast. So I guess probably the first obvious examples that people think of when they think of prediction markets that are markets outside of finance are like predicting like elections. Elections are very important. They determine, what policies our country has, and they have implications for companies, lobbyists, etc. Lots of people want to know the outcomes of elections, but they're also very hard to predict. So that's one very basic thing. But the possible domain of markets really is huge. So something that's a little bit further out there would be using prediction markets to predict like the replicability of like scientific papers and use that to help like allocate science funding. Another potential domain that for prediction markets to be useful is like corporate governance. Like you could predict try and predict the outcome of various like product initiatives or strategies for like high level executives. And then they could choose to pursue these different avenues based upon where markets are trading. An even crazier idea is like the idea of personal markets, that you could create smaller markets for you to bet on your friends on things like whether you'll get married, whether your friends will have kids, etc. There's just like a huge number of domains where prediction markets could be applied, but currently aren't.
All right, so I'm going to set up a prediction market for whether or not Stephen will have enjoyed this interview by the end of it, and let's see what the people.
Exactly. This sort of silly stuff, both is fun, but there are cases where these types of things can be useful too.
Yeah. Well, and in terms of me actually setting it up, I think this gets into Manifold specific setup. So let's move out of the theoretical and let's talk about the specific. Can you tell me about Manifold's setup specifically? Because we did talk about how, there are practical considerations for these kind of things to work. For prediction markets to work, the ideal prediction market has a certain set of features, and it may not be exactly what it exists in practice. So what are the specifics of how Manifold is set up? How does Manifold work? And how does it differ from other prediction markets that are out there right now?
Yeah, so Manifold is a prediction market platform. What makes us a little bit different from other players in the prediction market space is that we have user-created and user-resolved prediction markets. So what that means is that you can go onto our site, manifold.markets, at any time and spin up your own betting market on any question that you care about. And then friends, strangers, anyone on the internet can come bet on your question, and from that you can extract a market probability, which is the market's estimate of how likely the results of your question are to obtain in real life. One unusual twist to our platform is that in addition to having user created markets, we also have user resolved markets. So what that means is that you are the judge and arbiter of whether the event that you created your market on actually comes to pass or doesn't. Most of the time, the questions that people create are obvious and unambiguous. Whether a certain political candidate will be elected. Usually that's totally unambiguous. Recent events in American political history may change that, but for most of the time, there's no controversy there. One of the big benefits of user resolved markets is that it opens the way to more subjectively resolved questions. So you could create a market on, will I think X policy by Y political official is good 5 years from now, whether I will like this movie, etc. It vastly increases the range of questions that people are able to pose and answer on our platform. It does so with the obvious cost that it introduces the possibility of fraud, of people resolving things incorrectly. In the case of fraudulent markets, like we, as the staff behind Manifold, may step in and bust your market if you resolve things incorrectly. But if you merely resolve things incorrectly, or you have a unique spin on certain events, which the vast majority of people will disagree with, we think that's your right, and you can resolve your markets however you like. And in the long run, we trust the market itself to determine who the good market creators are. We think in the long run, people will be betting on markets whose creators have the best established reputations over time. So that's one big part of what makes us different. The second and other important part that differentiates Manifold from everyone else is the fact that we're play money. So when a lot of people, when they hear play money, immediately trivialize it and think it's completely boring or stupid or pointless in the face of real money, which is obviously better. Clearly real money does have a lot of benefits. Prediction markets are originally designed to work with real money, and there are a bunch of empirical studies showing that those work, etc. But there are several unique advantages to having a play money ecosystem. The first is total freedom. Since we're play money, we're not beholden to regulations by the CFTC or other officials, and that means that we can have creators create markets on any topic that they can think of without any restriction. This would not be true if we were operating in a regulated manner using real money. So the other big benefit of play money is that it makes things totally frictionless to share. If I want to create a market and share it with one of my friends, I can simply copy the link and send it to you, and then you can immediately start betting. That onboarding process wouldn't be possible if you had to link your bank account and go through various background checks, etc. So the total frictionlessness, ease of use, and totally open platform where people can create markets about anything is an invaluable aspect about play money.
This is really interesting to me because I come at this from a poker and sports betting background. So I'm very used to thinking about, odds and payoffs and scenarios and kind of this gambling perspective, both from a poker standpoint and a sports betting standpoint. I was big in sports betting for a while. And so, I'm used to kind of throwing money around, and the idea that markets are very useful for figuring out the truth on something, right? Most sports fans would kind of accept that, what chance does this team have to win the game? The best answer for that is what Las Vegas says. The team's chance to win is whatever the odds Las Vegas gives them. For the most part, people will agree that's basically the right answer. Because for most big sports events, for the Super Bowl or for big NBA games or whatever, there's a lot of money being bet on those, and that it's the market mechanism we talk about. I'm interested in a practical sense how much some of these weaknesses that we're talking about matter. The weaknesses being the play money aspect and the lack of liquidity. Obviously, Manifold is not as big as the market for NBA betting right now. Maybe one day it will be. But right now there's more people interested in the NBA, which is, that's fine. You're young. But in a practical sense, how much do you think that is actually hurting market efficiency right now? The fact that it's just people kind of tossing around play dollars. Do you think it's the markets are still pretty good, or do you think that some of them are kind of garbage, but we're just going to improve over time? Like, how do you see that?
Right. So one of the benefits of having an open platform is that you have a long tail on random markets that are relatively low liquidity and like of more specialist interests. We think it's great that our platform allows those markets to exist because they wouldn't exist otherwise. And in some sense, like any amount of like predictive accuracy can even extract from that.
What kind of thing when you say like a long tail of like weird events?
An example market would be if like some random scientific paper gets replicated, and this is some obscure paper that only a few specialists in the field know about. This could be a personal question that's only relevant to you and your friends. This could be about like a niche local level Estonian political official that most people in the world haven't heard of. And the benefit of our platform is that you can create a prediction market on those questions and get a reasonable answer. I would definitely say, though, as the salience of a market or question rises, that the prediction accuracy improves a lot. We actually, in the past, have tracked like the calibration results for how our markets are doing, and they're pretty good. Calibration is a basic way of like checking how good your prediction market system is. You look at the, if you, for instance, like if a market 3 weeks before it resolves is predicting that it will happen with a 75% chance, you can look at all of the prediction markets that are saying a similar thing, and then after they resolve, check to see if they resolved affirmatively 75% of the time. That's what it means to be well calibrated. So we have crunched numbers previously for Manifold, and I personally was very pleasantly surprised by how good our markets are, especially on larger questions of greater importance, things like the midterms, things like the World Cup that draw a lot of attention.
Have you published that anywhere? Because I would be super interested to read that. This is something where like I always look at that type of thing for 538. For instance, 538 makes a lot of predictions of political races, and they publish their calibration results, and they're very, very tightly calibrated. Do you guys publish that, or is that just internal research?
We do actually. On our Substack, we publish like any calibration findings that we have. A lot of the results that we do have are generated by our users and not internally. Since we open source nearly all of our information, if you want to do any number crunching on our platform, you can.
Have you ever like done a thing where you compare yourself to other markets on similar questions? Like say questions like, who's going to win these big political races, where you can fairly expect like there's going to be a prediction market for this on every big prediction market site. And there's probably you could probably go to a sports gambling website in Europe and bet on it.
Yes.
Have you and kind of look at like, do our odds match everyone else's, or are we like way out of line? Would that be a signal that like the play money thing isn't working, or it is working?
Yeah, one of our users actually crunched the numbers and figured out that Manifold performed better than any of the real money prediction markets on the most recent midterm elections. But very surprisingly, we did slightly worse than 538 and Metaculus. 538 is a poll aggregator using some stats magic, and Metaculus is an aggregator of experts and internet enthusiasts. All of these platforms turned out to be pretty close in their final Breyer score, which is one formal way of comparing results across different platforms in terms of their forecasting ability.
Yeah, I'm not surprised about the 538 thing. I'll come back to that, especially for political markets. But I want to talk about specifically why I think politics is hard for prediction markets. But before we get into that, one thing that, we're talking about the relative strengths and weaknesses here. Do you think that there are specific situations that prediction markets are very good at, that they're strong in, and maybe other areas where they're weaker or inferior to other approaches? Or do you have a sense of like where they're strong and weak like that?
Sure. So there are a few like general characteristics which matter a lot. So the most obvious one is prediction markets need to be about something that's clear and unambiguous. If you're predicting something which could have an ambiguous result, and the market forecasted that it's not going to be very accurate. There are time value of money considerations. So if the event you're trying to predict is like many decades out, then the results from that are going to be less reliable. The closer they are to the present, the more reliable those results are going to be. If there's like a lot of liquidity or trading volume, then, the results of those types of markets are going to be more valuable. And if they're basically causally distinct from what the market creator's actions. If there's no way for the market creator or people betting in the market to causally influence the results, then the prediction market forecasting results are going to be more accurate.
Another thing that I wanted to ask before we get into the nitty gritty of like specific things going on with specific kind of political predictions is just what is your kind of ideal end state here? Because I know what, prediction markets look like right now, and I know what manifold markets looks like right now, but what do you think an ideal market would look like? Say if it's 20 years from now and prediction markets have succeeded wildly and you're all famous billionaires at this point or whatever. But what would like an end state for prediction markets look like in your view? Would there still be play money markets? Would user created markets still be a thing, or would we have moved past that? Like, how do you view this in an ideal world?
Right. The first step towards an ideal world is for the prediction market industry to be like vastly deregulated. It's basically impermissible by regulatory fiat to create markets on most of the interesting questions that people care about. So simply allowing those types of markets to exist is probably the first and most important step to moving towards this ideal world. I do imagine in the end state that play money markets are always going to be part of the story. I think there just is a lot more freedom and potentially a lot more viral potential with having play money. But of course, in an ideal world, we're going to have like large, extremely liquid prediction markets on all questions of societal importance. And we're going to have a large number of institutional traders trading huge amounts of money on these questions, very deep and liquid markets for people to stake out their positions in. And the result of all of that will be much better calibrated forecasts and more opportunities for people to earn a livelihood by participating in prediction markets. That's something that's not really possible today.
In this ideal world, is there basically no regulation, or do you think that regulation would be helpful of some kind?
I think there are some regulations which wouldn't be too harmful in this ideal world. I'm uncertain about what the total level of regulation is, other than the fact that we need vastly less of it today. And our main priority should be legalizing prediction markets on the big obvious questions that people care about.
Makes sense. So let's talk about specifically politics, because this is a political podcast in most ways, and we love to talk about politics. And where prediction markets intersect with politics is very interesting to me, because I wrote a thread on Twitter a while back, basically making the case that prediction markets, as they exist right now, are not very good at politics, and they have kind of obvious weaknesses that we would not tolerate in other markets. And I think I wrote this, in 2020. This was late 2020. Actually even, I think I may have even written it before the 2020 election results actually happened, but certainly after the 2020 election. And we saw some huge anomalies. But my basic case was that, there's all these things that prevent prediction markets from being very good. There's kind of the technical factors of like people can't bet much real money. In the case of Manifold, I guess it's no real money. But even in the real money sites, you just can't get that much money on there. There's these artificial limits to how much you can trade and how many traders there can be. And there's all this kind of gunk that blocks the market from working very well. And there's also in politics an unusual amount of people who kind of bet not for the purpose of like profit maximization, but for the purpose of like political cheering, so to speak, like money as speech, almost like I'm betting for my favorite guy because I believe in him rather than because I believe he's going to win. I just believe in him as an abstract ideal. And, the idea of markets is that good money chases out bad. The institutional investors have deeper pockets and they will, bet more on the truth. But in political markets, I'm not actually sure that's the case. I feel like bad money can swamp the good money. And you saw things like, after Donald Trump had lost the election, after the election was over, there were still, betting markets, for real money betting markets that would give him like 10%, 11% chance to be the next president, like into January. So I don't know. What's your take on this in terms of like, my take is that I am not surprised in the least that 538 is more accurate than almost every other prediction market. Is that surprising to you, or do you think that prediction markets as they exist in politics right now are kind of weak? How do you think about this?
Yeah, so I think the first and most important point is that political prediction markets are still in their infancy, and the market volume you're seeing in aggregate on all political prediction markets just pales in the comparison to real financial markets. The notional value that gets transacted every day and S&P 500 futures is orders of magnitude larger than the total amount that everyone traded during the previous election cycle. So they're just a question of scale, and the scale is not that large right now. We're largely limited to like amateurs and individual traders, and there's basically no institutional capital trading in any of these markets.
Yeah, I guess it begs the question, to use the correct phrase, it raises the question of how much liquidity do you need? Because we know that like S&P 500 level liquidity, trading, interest rate futures or whatever, that's massive. And clearly that works. And clearly if you've got like 3 people or 4 people just kind of tossing some play money around, that's not going to work. But what's the level in between there that actually gets you something pretty decent? Like, I think about it on 2 levels almost. What's the level that gets you like a directionally pretty good prediction, even if it's not a great prediction? How much volume do you need for that? And then how much volume do you really need to be considered like almost the source of truth kind of prediction? How do you think about that? Do you have any kind of benchmark in your mind for like how many traders do we actually need?
I think it really depends on the type of market. As you were suggesting earlier, politics is unique because people are willing to pay a lot to cheerlead for their side, or to be able to say after the fact that they bet on their favorite candidate and he won. People are willing to pay a lot for that. So you need, more traders and institutions in the marketplace to correct for that. In other domains where it's not the case that there's like a large bias, like tilting the playing field one way or another, you can get by with relatively few traders.
But what's interesting is you're seeing this kind of emotional attachment, betting for emotional reasons rather than for rational reasons. So what we're talking about here, right? And we think that happens more in politics. But, look at the rise of something like GameStop or AMC or these kind of meme stocks where people are clearly purchasing them for like weird, emotional, like cult-like reasons rather than, economic fundamentals. But it's one of these things where like, if this mass of people just decides that the price of GameStop should be like $300 a share, hell, it might actually just become $300 a share. Like, who's to tell them they're wrong? Maybe they can just swing the price. I don't know. Sorry, I just had that thought, and it's like maybe people emotional driven, pricing is the future. I don't know.
Because part of that is like George Soros' concept of reflexivity, where the market prices actually change the underlying dynamics in the market. So for instance, if you have this huge glut of retail investors who are willing to pump up your stock, that might allow you to do things like refinance by borrowing at a lower rate or something, which will have real implications for your business in the future. So the market can react to these price spikes, and that can in turn make the price level like more sustainable or justifiable. I'm not saying that that's necessarily true in the case of GameStop, but it is true in general that those types of things are possible. For prediction markets, I think things are a little bit different, perhaps. Maybe if you're betting on Biden or something, that if enough people see that prediction markets are predicting a higher price, that might causally induce more people to vote for him. Perhaps that's true. Perhaps that effect exists. I don't think that effect can be too large. There are limits to how much people can be driven by these factors.
Yeah, I think it's pretty clearly true that like polls are important. And if we just think about prediction markets as a form of a poll, a form of asking people who they think is going to win or who they're going to vote for, it's pretty clear polls matter in the sense that they change how the media covers a candidate. If a candidate is getting really, poor polling in a primary, for instance, they're only getting 3% of the poll, well, the media is not going to take them seriously. Whereas if the candidate is getting a huge amount in the poll, they're going to be treated as a serious candidate. They're going to get lots of attention. That's going to help them. I could see some kind of feedback mechanism working like that, because we see that with polling. There's clearly a feedback mechanism.
Right. But one point is that in either case, it doesn't really matter. If you believe in the efficiency argument, then the market should adjust to what the current best estimate of that event occurring or not, regardless of the fact of the market's own ability to influence whether the event happens or not.
Yeah. And I think that political prediction markets, they have reached the level where they're directionally accurate. You're not getting weird results Nancy Pelosi is 90% likely to lose her primary or something like that, and actually she just retired, so that's a bad example, but something like that where clearly it's 90% in one direction and it says it's 90% in the other. We don't see any misses of that type. Everybody seems to be directionally accurate, but I'm not sure that we've got the volume yet to really make a claim that they are better than directionally accurate, that they are one of the most accurate sources, if that makes sense.
Or it also is good to be cautious about interpreting the result of any single election cycle. Each individual race is massively correlated with other races, and it may be the case that the slight outperformance of 538 versus real money betting markets is simply due to the political bias of the participants in these markets, and that if the election turned out a different way, it would show the real money markets performing slightly better and slightly worse. Really, you have to aggregate over a decade's worth of information to really determine which forecasting platform has the better signal.
I do think there's things you can do though. There's signals you can tell immediately that something is wrong without waiting for a huge amount of data like that. If there's arbitrage laying around, if there's enough, if for instance, one prediction market is so different from another that you can bet both sides of it at two different markets and make money, that's a sign that at least one of those markets is clearly wrong. Sometimes there's internal arbitrage where you can, I remember, I'm going to get this wrong, but there was something where it was there was some betting site in 2020 that had Joe Biden at some weird scenario where he could he was more likely to lose Pennsylvania but still win the election, where it was an obviously absurd result. You could just look at it and say, no, that's wrong. That's not going to happen. Joe Biden does not have a 40% chance to lose Pennsylvania but still win the election. So I think there are some things you can do, but definitely sometimes you need to wait for data to just roll in over time.
Yeah, exactly. Interestingly enough, this is how I first became interested in prediction markets. I got my start by arbitraging political contracts on Intrade, which was an early prediction market exchange run out of Ireland, and which is now defunct, sadly enough.
Sadly enough, there's a lot of prediction markets, kind of biting the dust these days. And actually, you mentioned the CFTC earlier, who is one of the entities that regulates all of this, and has staked a claim to we're the ones who can tell you what to do. Do you have any thoughts on the whole CFTC? I don't know what to call it. The kerfuffle, the episode they had with Kalshi, and there's accusations that Kalshi, which is this, for those who don't know, Kalshi is another prediction market site. There's accusations that Kalshi basically tried to put competitors out of business, that they went after Predictit, they went after Polymarket, and they sicked their regulatory friends because they have better connections. Do you have thoughts on that? Because I'm not super close to this world, but I know that was a big controversy for a while.
Yeah, I've heard these rumors as well. And unfortunately, despite running a prediction market myself, I don't have super privileged information into what exactly has happened. I think there's a reasonable chance that those rumors do turn out to be true, but I also wouldn't be surprised if they were not true.
Has anyone set up a prediction market to see?
Yes, 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 yeah, we have.
Oh, well, I'm almost curious if we can look up, like, what does the prediction market say? Like, did Kalshi actually conspire with regulators to put their rivals out of business? I would love to know what the market says there.
So I have it in front of me now. One of our users created a market on will a FOIA request reveal that Kalshi was primarily responsible for the CFTC's decision to shut down Predicted. And that market is currently trading at 39%.
Hmm. Like all good conspiracies, still kind of uncertain.
Yeah.
But
Yeah, unfortunately, I don't have any additional information to add over and above that.
one thing I'll say just to wrap this up is that I do think prediction markets, like I said, I think they've gotten to the point where they're directionally accurate on most questions, except for maybe like the very smallest questions that only have like 3 bettors. Let's ignore those. But I think on most things, they've got enough liquidity to be like directionally accurate. I'm still skeptical of their high level accuracy. Like I said, I expect 538 to continue to outperform them. I will say the beauty of prediction markets is that I think they're now aware of this fact. I think they are aware of the fact that 538 outperforms them. And that means that it's now going to be harder for 538 to do that, because every time 538 updates their models, that information is now being used to bet on the prediction markets. And so a lot of the prediction markets, I think, are following 538, which makes it hard for 538 to beat them in the end,
Right, right. We've actually seen that on Manifold. A lot of our users during the last midterm cycle were very self-consciously pursuing a strategy of just like betting according to whatever 538 says. And that turned out pretty well for them. I personally was on the other side and was betting against 538, and I ended up losing a bunch of money.
There you go. I mean, it's the beauty of prediction. It's the beauty of markets in general, is that you can have a winning strategy and it can work for a while, but if you publicize it, it doesn't become a winning strategy for very long. If other people can duplicate it, the market can correct. So that's why if you have a strategy that beats the stock market, don't tell anyone. So, but let's talk about let's get a little weirder here, because like we said, you can do a lot of stuff with prediction markets that is not just predict this stock, predict this sports result, predict this political election. This is all stuff that I can do in the real market or on a sports betting website, and I can even bet on politics if it's like a European sports betting website. You could usually bet on American politics on some of those, but you can do very weird stuff on these. And sometimes it raises like weird ethical considerations. So are there areas where we think that opening things up to predictions and markets is just kind of a bad or immoral idea to begin with? Are there places where we shouldn't have markets at all?
Yeah, so I would say that prediction markets, like many other, social institutions, are capable of incentivizing bad behavior, and in those cases, can be bad for society. So one of the examples that people often bring up is this concept of assassination markets. So assassination markets are prediction markets that are set up with the intent to pay out a would-be assassin if they carry out an assassination. So an example of that would be something like, will Biden be assassinated next Monday at 4 p.m.? Like, obviously, you're probably not going to know the answer to that question unless you're involved with the team carrying out this assassination. But if you create a market like this and subsidize it very heavily with a lot of liquidity, then you're in effect like paying someone else to like do this bad thing for you. And that thing is obviously bad. I think oftentimes things like assassination markets their fears are way overblown, mostly because like this behavior is already like illegal. Assassinating people is very much illegal. So is conspiring to do so, etc. It's not clear that prediction markets are, going to create a vast swaths of like bad behavior that didn't previously exist, and probably aren't going to change too much on the margins. There are obviously going to be better and cheaper ways to do bad things without having to use this weird financial mechanism.
Yeah. I mean, I can see both sides of this argument. I can see that, look, you're probably not going to have like a wide, just gold rush of people trying to assassinate everyone just because some prediction market is now available. Most people just don't want to assassinate people because they are not like that. But on the other hand, I come from an econ background, and the number one rule of economics is people respond to incentives, right? And it seems to me like what prediction markets would be doing in this instance is making it much easier to get paid for doing a bad thing. Like theoretically, you could get paid to assassinate someone right now, but it's filled with all sorts of trouble. You have to find the person, you have to make sure they're not a cop who's trying to entrap you, and like it would be very difficult in a practical sense to get paid to kill someone. You can imagine 100 ways it would go wrong, and it's very difficult, it's hard. Whereas a prediction market would make it really, really easy to get paid to kill someone. Just go place your bet and kill them. And, people respond to incentives. If you make something way easier, it would be hard to imagine it wouldn't have an impact on some level, and even if assassination is too dramatic, you could imagine other forms of like socially maladaptive kind of things that would slide in there.
I agree. Yeah, I think. Well, I agree in the sense that markets are a tool to achieve various purposes, and if they're set up to encourage bad behavior, that makes them bad, and we shouldn't assume that all markets necessarily are good. I totally agree with that line of reasoning. I think in practice, though, it would not, in fact, be easier to pay out someone if you set up an assassination market. The very act of like making the payment and having that be traced, or people cashing out to their bank accounts, et cetera, there are all of these, mundane details that cut back against the worst abuses.
Fair enough. This is the argument that like, I don't know. I mean, again, I can see this working both ways, because you do see people who get caught, for instance, like betting on sports and fixing games. And you can tell because it's like some, second level tennis event in Turkey that all of a sudden had $1 million bet on it out of nowhere. And then a surprising result happens, and like, okay, clearly that was a fixed game, right? And you can tell that it was fixed because who else would ever bet $1 million on a minor league tennis event in Turkey? But at the same time, it does, there are instances where people fix games and get away with it. There are, like, that clearly happens in sports betting, and it's made easier by the fact that sports betting markets are fairly liquid and easy to access. So I don't know. I think it probably has some effect on the margin. What about other things, though, like insider trading? Insider trading is a sometimes legally gray area as far as what counts as insider trading and what doesn't. And some people argue, well, insider trading just makes the price discovery mechanism go faster. It's not actually even that much of a bad thing. Do you think that insider trading is a issue for prediction markets?
I think it depends. I think there are some situations where it would be beneficial, to the markets to have insiders trading on those things. I think the better way is for this to be for the rules to be disclosed and clear upfront about what type of behavior is permissible or impermissible. On Manifold, since we are play money, we actually like allow and in some ways like encourage insider trading. You can go and bet on your own markets or on markets people have set up and trade with your own unique information. And the benefit is this obvious efficiency argument. If you have the information, when you trade on it, the market will reflect that sooner, and more people will know the truth about the particular situation. In the corporate case, it's a little bit more dicey. As a executive in a company, you have a fiduciary duty to your shareholders. And it seems weird that you as a manager should be able to profit from these actions, which in reality should accrue to all of your shareholders or to the general public or something like that.
Yeah, and we already have rules about this for the regular stock market. If you are a manager in a company, then you can't just go insider trade. We have regular rules about this. In your kind of ideal prediction market future, do you think that sort of regulatory authority should extend to prediction markets, that people, at least certain categories of people like corporate managers or whoever should not be able to bet on prediction markets about their own companies?
Yeah, I would say personally, I'm uncertain. I don't know what the optimal like regulatory regime would be. I can definitely see an argument going both ways, and in particular, if it does turn out to be the case that having more regulatory scrutiny on certain types of markets, I don't think that should be construed as like a universal rule. Or I think the regulations would be best decided on a case by case basis and figuring out which rules are appropriate for markets in particular industries. I'm skeptical of the idea that there are these banning all insider trading or the blanket rules will turn out to be the best for society in the long run.
Here's another argument, and this is one I'm going to throw out there, even though I'm not sure how I feel about it. There's a potential argument that gambling in general is kind of a socially maladaptive behavior. Gambling can be fun. It can, lots of people enjoy it. But like if you open a new casino in your city, you should expect to, have a lot more problem gamblers. There's going to be people who lose their life savings because they're not able to control themselves. And, sure, there will be people who just go once or twice a year and do it responsibly and have fun. But, it's kind of like tobacco or alcohol in that sense that it's a vice. Maybe it's good for society in some ways that people have this product they enjoy, but there are going to be people who abuse this, and like you need to look that in the face if you're going to have that as part of your society. I think this is something, when people like talk about legalizing sports betting, which is something that's happening in many, many states right now, there's an argument we shouldn't legalize sports betting because, yeah, maybe it's fun, but it's also going to hurt a lot of people, and it wouldn't actually be a good thing on net. So my question for you about prediction markets is, for real money prediction markets, as we move into the future, and I think everybody wants there to be more real money prediction markets who's in this industry, is this just another form of legalized gambling? And should we legalize gambling? Is there any socially useful function for this, or is it just another way for people to lose their money and it's actually on net bad?
Yeah, so one of the big differences between prediction markets and markets in general versus gambling is that the former provide like a massive surplus to society in terms of the information and like resource, better ways of like allocating resources across time. So prediction markets primarily produce information about how likely events are to happen, and that information actually is very socially valuable. Knowing what the future is going to hold and on society's most important questions is just like a very valuable thing. So or like versus gaming or like a slot machine doesn't provide any social value to anyone besides the entertainment value it provides to the individual person. So I think that's the first consideration, is that there is this massive good being produced by markets, and all regulation should be should be thought of only within this context. Right? If markets are producing, let's say, $100 billion worth, or prediction markets are producing $100 billion worth of value a year in your country, and problem gambling is like frittering away like millions of dollars in savings or whatever, like the society gains much more by allowing these markets to be free and open. In practice, though, I think you could probably have things both ways. You could have, keyhole pieces of legislation which target problem gamblers and ensure that they're not allowed to participate, or something like that. Something which seeks to mitigate the problems of the worst user or the most compulsive behaviors, while still allowing society to benefit from having access to these institutions in the first place.
Mm-hmm. Yeah, it's something I've actually struggled with personally for a while, just because I've been so deep in these worlds for a long time. I was in poker for a long time, and I was like, what I'm doing, I'm basically just like taking advantage of people who are worse at poker than me. That's who's paying my salary right now, basically. Is that an ethical thing? Am I like playing into somebody's problem habit? And that I kind of, at the time, I thought, most of these people are probably doing it and just losing a little bit of money, and it's fine. They're probably responsible. But I don't know if that was just me, justifying myself or whatever. And the same, like, I love sports betting. I still sports bet. I think it's fun. I think I can do it responsibly. And it's easy for me to say that because I'm a winner long run in sports betting. But is it a good thing if everybody in society has greater access to that? I legitimately don't know. I don't know if I'm like the smoker who loves cigarettes, who is protesting that cigarettes are not really bad for society and we shouldn't regulate them, So I kind of toss my hands up. I'm not sure how to deal with it, but
Yeah, I think trying to the correct approach is still trying to mitigate the harm versus like banning it overall. That we can live in a world where people make reasonable trade-offs that deal with the reality of problem gamblers and people with compulsive behaviors without ruining it for all of society.
Makes sense to me. So a couple quick questions, but we're almost up on time now, but I'm curious, have you seen interest in prediction markets spike in the last couple years? Because it certainly seems like we've kind of hit this inflection point where like the momentum is growing right now. And if so, like, is there any particular reason for that? Was there a turning point?
Well, I think there are a few turning points actually. So one was there was a Supreme Court decision several years ago which legalized sports gambling. And sports gambling are obviously not prediction markets, and prediction markets are regulated in a completely different way.
Legally they're different, but aren't they aren't they just prediction markets in specific to one area?
Yes, they are. In point of fact, they are, but the law thinks otherwise. But I think people one result of this decision is that a lot of people think that the writing is also on the wall for prediction markets, and that we can expect continued liberalization in this area, over the coming decade. So I think that is one turning point for the industry and has made people more excited again about the prospect of prediction markets. Another is probably the rise of crypto. There are currently real money crypto prediction markets, which are active now. Polymarket is one example of these. That's gotten a huge number of people interested in prediction markets in general. Manifold actually originally was a crypto idea. We decided very early on that our vision would be better pursued through play money rather than crypto with all of the various regulatory and usability trade-offs that it had. But that is another path that many people are interested in as well.
It's a funny story. So I was chatting with Vitalik Buterin, who's the creator of Ethereum, about prediction markets, and this again was around the time of like the 2020 election, and I was we were having this debate back and forth of like, are they actually well calibrated in this current environment, or are they kind of misinterpreting things? And one of the points that I made to him, because he was in the middle of betting like Vitalik Buterin levels of money on like crypto betting markets, was that these markets have such a huge barrier to entry. The ones that he was using where, you had to be a crypto person, you had to own Ethereum, you had to go on this specialized blockchain and use Ethereum to buy some secondary token, and then you had to use that token to enter a smart contract, and like, it's this like really convoluted, like 9-step process for anything to happen. And I'm like, how many real people are doing that? Like, let's be honest. How many actual human beings even know what these words that we're saying are? If I said this to like a 17th century human being, they would think I was a witch. So that factor, I think, the barrier to entry factor can't be overstated. I did end up convincing him to bet a lot of money against Trump becoming the president. So that was just a fun episode that happened. But I think you definitely have to factor like, are actual humans going to be able to do this? Are the barriers to entry too large?
Yeah, that's exactly why we pivoted away from crypto. I think in the long run, I think crypto prediction markets have a lot of potential, and maybe eventually there'll be a large liquid one, but that time is still farther away.
All right, and last question before we get to the last question. You have recently moved to San Francisco, and previously you were in Austin, right?
Yes, that's right.
How do you think, this is totally unrelated, but I'm curious how you think about the Austin versus San Francisco vibes for startups, because there's there's been a big culture war almost about like, is San Francisco dying? Is San Francisco still the place to be? Like all the startups still want to be in San Francisco. Is everybody moving to Austin? Is Texas the future? Blah, 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 blah. Like there's this whole discourse about this, right? Like I'm curious if you just have a take on Austin versus SF.
Yeah, so for me personally, I really want the Austin story to be true of like people moving to this new city and like refounding the tech capital of America and the world there. But unfortunately, I don't think it's that true. I feel by any rights, San Francisco like deserves to lose because of poor management at like every level of government.
San Francisco poorly managed. Whatever could you mean?
But the reality is that the network effects are so strong that it probably is going to continue to be the world's main tech hub, at least for the next decade. I think like the rise of AI and the fact that all the top tier AI startups are here has a lot to do with this. But
yeah, and the black pill here, the real cynical take, is that if Austin was to become the next San Francisco, it would probably just develop all of San Francisco's problems. Like maybe not as bad because it wouldn't have had them as long, but had San Francisco's housing market, Austin is partially on the way there, and there's a lot of NIMBYs in Austin who don't want to build more housing, are trying to block it the same way they try to block it in San Francisco. So part of me just thinks if Austin kept growing along that path, they would just turn into San Francisco. I don't know.
Yeah, that seems very plausible to me based upon my experience in both cities.
All right, so we are coming up on time now. We'll get you out of here soon. I want to ask the final question that we always ask to every single guest on this podcast, and that is, where can people go to learn more? If they're curious about prediction markets, if they're curious about the concepts and the ideas that we're talking about today, what would you recommend for them? This could be something to read, something to watch. Could be a blog, a book, a person to follow on Twitter who's interesting. Just if somebody wants to learn more, what would you recommend they do?
Sure. Well, the first step would be to sign up for Manifold Markets, which you can reach by typing manifold.markets into your browser. If you want to read more about prediction markets, we have a Substack where we discuss developments on Manifold and other forecasting platforms, which you can find on our site. And lastly, if you want to, if you're interested in reading another a publication about prediction markets, if you're not already a subscriber to Scott Alexander's blog Astro Codex 10, I highly recommend it. He has a recurring section of his Substack called Mantic Mondays, where he talks about developments in prediction markets, and it's always great.
Yes, has Scott Alexander been one of like the big inflection points for people's interest? I almost feel like he's responsible for like a solid quarter to a third of the interest in prediction markets.
Oh, I for sure. And like he also was instrumental in promoting Manifold. So we obviously are in his debt. But I think he has done a lot of raising awareness for prediction markets in general on bringing it to a much larger audience.
All right. Well, I am curious and hopeful to see where prediction markets will go from here. I think that they are a really interesting tool. We're going to have to see how they develop. We're going to have to see how the regulations develop and what happens over time. But I think I will definitely be watching, and I'm hoping that they can continue to grow and be useful. I want to thank my guest for coming on the show today, Stephen Grugett. Thank you so much.
All right. Thank you.